here we are with Paolo Ardoino from Tether. He's the CTO of Bitfinex. Paolo, it's so great to have you on the Defiant podcast, with Tether being the most important stablecoin by volumes and market cap. Just to put our readers in perspective, Tether is the largest stablecoin. It has over 82 billion in market cap, and let's see, the latest 24-hour trading volume was at 14 billion. And just to put things in context, the next largest stablecoin, it was USDC, with about half the market cap, 26 billion, and a fraction of trading volume at 1.6 billion. So Tether has really become this integral part of cryptocurrency trading and the entire ecosystem. So yeah, it's great to have you on the show to talk about how Tether is built, how it works. And I love to dig into some of the main questions surrounding the Tether stablecoin. But if we can just start from just like the very basics and to level set for the audience. Of course, I put things in context about Tether's size, but I'd love for you to explain how Tether works. Like, how is Tether able to keep this one-to-one pair relation with the US dollar?
Absolutely. So Tether was born in 2014, and as you said, is the biggest stablecoin by market cap. Actually, it's 3 times bigger than its second competitor. So the reason to exist of Tether was simple in 2014. It was allowing arbitrage, that is the part of the job that some traders and market makers are doing in the cryptocurrency market, to exist. So arbitrage means a trader can buy Bitcoin on the exchange where the price is lower, and sell it on the exchange where the price is higher, move the dollars back on the exchange where the price is lower, and so on and so forth. So this is called arbitrage. And in 2014, it was extremely important because there was a case, multiple situations where multiple exchanges, the price of Bitcoin, some exchange was trading, $200, and another exchange was trading $250. In 2013, the first time Bitcoin went above $1,000, we had instances of Bitcoin being traded on one exchange on, maybe the price was $1,200, on another exchange was 1.1, on another 1,000, and so on. So, and in order for arbitrageurs to work on the market and close the gaps and close the spreads across exchanges, they have to move fiat quickly across all the different cryptocurrency exchanges. But that was impossible using just fiat as banking wires. It was too slow, wasn't definitely not cheap. And so the simpler reason to exist of Tether is creating a tool that leverages the same brilliant idea that Satoshi had, called blockchain, and just put a dollar on top of it. So how it works is simple, right? Tether has one bank account, multiple bank accounts, and also has a platform called Tether.to, is a website. So you go on this website, you register, there is a thorough KYC and AML process. So it's important for us to make sure that everyone that uses our platform is a legitimate party and also is recognizable and so on. We want to keep out the back actors, of course. And then once the user is fully set up, is fully registered, went through the KYC ML process, then this user can start acquiring USDT tokens. So the process to acquire USDT tokens is as simple as sending a wire to one of our banks and then specifying the blockchain address where the user wants to receive back the USDT tokens. So you send, for example, a wire of 100K, you get back, receive the wires, we check everything is good, we send you the tokens to your address. Then, you use these tokens, you trade, you this and that. You want to redeem, you send these tokens to our treasury address, treasury wallet, and then we send you back the money via a bank transfer, via wire. So it's simple as that. So Tether is a centralized stablecoin, means that it's using blockchains that, of course, are decentralized transport layers, but also has a centralized party because Tether is the issuer of the stablecoin, and it is using banking, the banks, to hold the cash and the cash equivalents and the other assets that compose the portfolio, and to process the transactions in order to issue and redeem tokens to its users.
Yeah, and I'll love to go back to the question of centralized versus decentralized stablecoins later on. But to start off with, drilling deeper on the issue of reserves and your banking partners, like this is just a key piece of how Tether works. Like it does rely on your reserves to keep the stability and the one-to-one peg, and that's the whole point of Tether, right? So yeah, it's super important to understand the composition of reserves and the banking partners. And while Tether has been able to grow and become the biggest stablecoin, so clearly it's found a fit with the market, and people do trust it. There remain questions around the reserves and the banking partners and so on. So to start with the banking partners, since you just mentioned you require these banking relations to obviously hold these fiat reserves and other instruments that are backing Tether. Can you share which banks you're using to store reserves?
So many times I get the question, right? So coming from the FUD that has been thrown to Tether in the past many years, there was this concept that no one knew which were the banks used by Tether. And it's funny because, if any person would sign up to the Tether website, tether.to, you open an account, you go through the KYC AML process, then you want to see where you want to send a wire. You will see, for example, one of our banks that is fairly known is Deltec, right? That we use to receive wires. So, and there is a lot of information. So us as one of the customers of the banks, we are under the requirement of not disclosing the name of the banking partners ourselves, but they are available on the website and have been reported by multiple parties. You can see Bloomberg, you can see Moody's also created a list of the Tether banking partners and so on. So all this information is public in effect. So since we have a non-disclosure agreement with the different parties, we should not disclose them ourselves, although they are public on our website when you're trying to send the money, or you have them disclosed in many different locations and many different newspapers and reported by customers and so on and so forth.
You are able to say that Deltec is one of those banks?
Yes, because that's been disclosed by Deltec itself. If you remember, there was a letter from Deltec CEO signed by himself stating that they were keeping our funds. And they are one of the many. But one of the reasons why we don't go around and we don't say to the world, we have this bank and that bank and so on, right? So they are basically all public, the banks that we have. But there is one issue that the Tether truthers, as I call them, or the haters, they like to harass these banks, right? So if I were to say a name, after 1 second, you would have a ton of calls to the CEO of the bank and to everyone working in the bank. Physical harassment. We had in the past cases of physical harassment directly on the premises of these banks to trying to extort information. So we think that is important that our banking partners are also protected from this group of people that like to go around and have time to waste to harass them. But I can tell you that we have BDO, that is a really big important auditor that is producing our quarterly attestation. BDO is the 5th auditor in the world, and they are not just looking at random numbers. They are contacting each one of our banking partners. They are getting information, deep information about our reserves. And they are compiling a quarterly attestation, a quarterly report that shows that is made public and shows that, in fact, not only Tether is 100% backed. So we have 82 and counting $billion in outstanding tokens. But, and so we have all the reserves to cover those tokens. Tether has also an additional, $3.3 billion of profits that were accrued thanks to the UST bills that we hold in our portfolio that were kept in the company, not distributed to the shareholders, and kept in additional protection.
I'll definitely go into the latest attestation, but on the banking partners, I mean, especially since we're in this industry that's all about transparency, and Tether being such a large player, it's still noteworthy to me that after all of your users' requests to know a pretty what I think is important fact on who is holding the reserves. Like if you're dealing with, especially for us in cryptocurrency, like we're used to being able to just check a smart contract and see if reserves of decentralized stablecoins are there. So it's just, it's out there in the open. So when you're trusting a fiat-backed centralized stablecoin, it's even more jarring not to at least know where the reserves are. And I understand this about, harassment and so on, but they're banks, like they have security measures, like they should be used to being able to protect it's their business to be able to keep their assets safe, and I guess like their personnel safe as well. Like it's kind of the primary thing that they do.
Well, but that's why you have also non-disclosure agreements. You usually, it's like, look, I can tell you, let me give you an example, right? So the same people that you are saying that are asking us, about the banks are also asking us, can you name the list of your biggest users and people the biggest customers that are issuing and redeeming? So should we breach our confidentiality agreement with them and with our customers that trusted with their information to make happy, these guys that are asking about, who are your biggest customers? Of course, would be great to live in a world where every single bit of information.
Of course, like there's a difference between like a private citizen, like a private user, which of course, like you shouldn't disclose your clients and your users' identities and personal information, but it's different when it comes to the bank that's holding your reserves. But it's okay. I understand you have non-disclosure agreements, and we can move on.
Yeah, it's also we have the attestation, right? So in the end, we have a top 5 auditing firm that is looking constantly at this information, contacting all the top management of these banks, and is doing a really thorough work. And look, so think about it, right? So yes, you can say, well, who are the Tether banks? First of all, again, you can look at the report from Moody's, one of the top 3 rating firms in the world. And they reported all our banking connections. So it's not that we are trying to keep them hidden. They are all public already. So if I'm here and saying, we have a non-disclosure agreement with them, but they are public already.
By Moody's are your banks?
They are definitely a subset of our bank. So I saw many names. Yeah, because of course we have many banking partners around the world. Let me tell you a story, right? So everyone in early this year was suggesting that Tether didn't have all a great banking partners. And everyone, was saying, well, you should look at your competitors. They are so more solid. They are providing all the names. They are much more like transparent and so on. And what happened? That the banks that these competitors were using went belly up. Basically the 3 of them, the most trusted people and banks in the industry in February and March 2023, They all went belly up. They had to be saved by FDIC, by the federal authority that ensures the capital, because they had a hole of 3.3 billion. So what I'm saying is that Tether has the most solid banking connection and relationships that you can find in this industry. When the entire market, also the fiat market, went crumbling, Tether was the only one that had the proper risk management to not leave uninsured cash in banks that would have caused, what caused to our competitors. That was a drop in price of 13%. And so I understand that there is a lot of questioning around what we do, but we came a long way. Since 2021, we provided a ton of information. We have a great firm that is doing our attestations, super thorough. We survived through every single black swan event in this market in the last year and a half. Well, actually in the last 7 years, but also in the last year and a half, it happened everything to every single company. All the great heroes of this industry were taken down. And also the most trustworthy stablecoins had huge issues. And yet Tether is here, is providing a great service, is providing a ton of transparency. You might not agree with me, but it is the fact, right?
No, I definitely think it was very ironic what happened earlier this year when, Silicon Valley Bank and Silvergate and all the kind of startup focused regional banks that were in trouble and which Circle relied on to keep it reserved. They had issues, and then USDC suffered a depeg because it had some of their reserves in these banks, which were going belly up. And it was actually USDC that had issues and not Tether, where, as we know, it's the focus has been on Tether and its banking partners and not Circle. So I agree with you. That was pretty ironic, but still, I mean, that doesn't take away from the fact that I understand why Tether users would want to know from you just a confirmation of, hey, like, here are the list of banks. And you mentioned kind of having reserves in insured banks. So can you at least say whether all of Tether reserves are in banks that are covered by FDIC? And, that would imply, are they all US banks, or do you have money offshore?
I didn't say that. So I didn't say that all our banks are insured. So let me tell you how it works, right? So the FDIC insurance, that is, classic, that is US based, right? But also in Europe, for example, you have a similar thing where the FDIC in US insures 250K. So of course, for a per account, right? For a stablecoin is nothing, because if you keep billions there, is really nothing. And so in Europe actually is 100K, right? So the first question that someone new to this industry would have for a stablecoin issuer is that why you are not keeping everything cash in the bank, right? So you have 82 billion, you should have 82 billion in kind of pure cash in the bank. And so, interesting enough, is not possible to do that, right? So you cannot keep 82 billion on a balance sheet of a bank in pure cash. So the way it works is that the bank will ask you to start putting the money somewhere, and the classic answer is US T-bills, especially if you want to, since you have to have the majority of your assets in something that that can be redeemed quickly redeemed for the line. Actually, the 100% of your assets have to be redeemed quickly, and it's been extremely liquid. The US T-bills are a really good proxy for the dollar, and they are also providing a great yield. So that is where the majority of our reserves are. But also the other important fact is that imagine if you were, and that is exactly what happened to our main competitor. If you were to leave like $30 billion in pure cash in a bank, what would happen is that if that bank goes bankrupt, that cash would be dragged into the bankruptcy proceedings of the bank. because the insurance, so FDIC, would cover 250K, and the rest of the 3 billion, well, that is gone. That would be gone. Thankfully, FDIC stepped in and, for the first time in the history of the US, saved that bank, providing the extra capital to save all the bank accounts, right? But that is a unique situation. You cannot count on the goodwill of FDIC to step in, because many times they didn't do that, right? So how you solve this problem? So the way to solve this problem is to keep, basically, to invest in T-bills and securities, so that you limit heavily the exposure to your banking partners. So if a banking partner would go down and you have everything in T-bills or securities, this will be returned to you even during the bankruptcy. So the securities are basically assigned to you, so they will not be dragged into a bankruptcy proceeding. And so that's what we do at Tether, and that is what also the other stablecoins now are doing. After the fact, after they had this issue, they started to understand that it's important to not leave uninsured cash in a bank, no matter which bank is, because three great banks, or three banks that were considered super solid and great in the US, went down. Doesn't matter if you have a US bank or a non-US bank, offshore, doesn't matter. You should not be trusting the fact that the bank, you should take measures to protect yourself from the worst case scenarios, because we have seen in 2007, 2008, we have seen how things can go south really quickly in the traditional financial world. Well, also in the crypto world in 2022, doesn't mean that the crypto world is exempt from issues. But we, as Tether, we are using multiple banks, but we are taking measures to make sure that whatever happens, we get back our money.
And last question on the banks, if you can provide a breakdown of, whether your reserves are in the US or mostly offshore.
So the split, I think, could be, we need to double check internally if we can provide that information. But as I said, if we had our cash in those three banks, probably we would have been, in those three US banks, would have been much bigger issues, right? So I think the cash, we use multiple banks, we spread, we distribute for risk management, the amounts, the reserves. So I don't have the ratio on, handy. We can discuss internally if we want to provide it.
No problem. Let's move on to your reserves. So you do provide these quarterly attestations. They are being done by BDO Italia. So it's a subsidiary of this bigger auditing firm. And in your latest attestation published in July, it showed that most of your reserves are in U.S. Treasuries and other short-term instruments. It was interesting that you reported that you have excess reserves. So there were approximately 3.3 billion of excess reserves to the Tether market cap. Was that because of the gains from U.S. Treasuries now that they are providing higher yields, or like where did that come from?
So the majority comes from the yield of the U.S. Treasuries. That now we use a really short maturity U.S. T-bills, 90 days, so less than 3 months, basically. We think that is a great way to accrue interest, and also have access to, among probably the deepest liquidity in the world. So Tether in this moment has, I think, around 72 billion in U.S. T-bills. 71 or 72, I would need to double check the exact figure, but that would put Tether probably in the top 2022. If Tether was a country, it would be top 2022 in terms of how many T-bills we hold. So that if you do a quick calculation, back at the end of the calculation, you see how Tether makes profits. And again, these profits could have been distributed. You take any, Silicon Valley VC, they would go quickly and distribute these profits among the shareholders. So given the fact that, we understand that there is always interest in Tether from the public, right? From our users, from the users on the USDT on the secondary market and so on. We thought that to show how deeply we do care about this industry and how deeply we are different from our competitors, we thought that it was important to keep the funds, the majority of these funds that we earn in the company, to provide further reassurance, further protection to our users. And we are keeping accruing these funds, and it's every quarter the profits are staggering. I mean, it's they are extremely important, and so we will continue to do this, keeping a good chunk of profits inside the company, because everything has been said about Tether, but we are Bitcoiners at heart. We believe that the industry has to be protected. And despite what happened to our competitors and what happened last year, we think that people need to have a solid reference company to look at.
Are you reinvesting these profits into more U.S. Treasuries, or what are you doing exactly with it?
So in part, they are invested in U.S. Treasuries, and in part, we also started with the excess reserves. We bought some Bitcoins. We believe that is also a great hedge for our users, right? So we live in a world that is, and just to be clear, because I know that also there is a lot of speculation, right? So Tether has more than $3.3 billion in excess reserves, and has around 1.7 billion in the Bitcoin. So it means that if Bitcoin would go to zero, we would still have more money than what we owe to our users of around 1.5 billion, right? So, but we still believe that having Bitcoin in our balance sheet is important, because we believe that we live in an unpredictable world. We live in a world that is, from the geopolitical side, is extremely worrying. And we want to make sure that we give a little bit of the diversity to our reserves, because whatever happens, we need to have an edge. And we want to share this with our users.
Do you hold any other cryptocurrency?
No.
Just Bitcoin?
Bitcoin is the king. Yes, because you look at BlackRock, you look at the, I don't want to enter into politics of which cryptocurrency is better, but if you look at the liquidity, the depth of the books, the interest from institutional traders and big institutional hedge funds, it's all about Bitcoin, right? Everything else is kind of secondary.
I'd love to also get more information about your other holdings. So yes, and maybe it'll be better for our listeners if I can share the screen. All right, so here we have the full table where you list your reserves composition. So there's 73 billion in U.S. Treasuries and other short-term cash holdings, and that's the majority of your reserves. But then there's other investments in corporate bonds, precious metals, Bitcoin, other investments, and secured loans. So this is an interesting part of your portfolio to me. On the corporate bond side, and just because this could be considered kind of the riskier side of the portfolio, so it's interesting to drill down on this and understand how this is made up of. So on corporate bonds, these are a lot riskier than U.S. Treasuries. Because they're riskier, they also provide higher yield, but you also risk kind of the price of the bonds to fall as yield rises, especially in this more volatile environment. So just on this fact, how were you able to hedge your corporate bonds holdings? Did this have an impact in your profit at all? I mean, the fact that how the yield environment has been increasing.
But Camila, it's important also to say that look at the size of the corporate bonds. So first of all, they're not risky. So when, even if you remember in the past, when people were saying, well, Tether has a lot of commercial papers, they are super risky. Well, that was not true. In fact, the commercial papers that we have, the extreme vast majority was rated A1, A2 by Standard & Poor's. So we were able to prove, and we're short maturity, we're 3 months maturity as well. So we were able to prove to everyone that Tether takes risk management more seriously than anyone else. But also, getting back to this attestation, the corporate bonds are still extremely solid, liquid, but also are $150 million, right? So if you look at that size, and $150 million, we have $3.3 billion in additional equity, right? So even if they were going to zero, we would be okay. So the precious metals, we have gold. We disclosed how much gold we have. I think that gold is a great hedge, is the thing that will protect, again, as Bitcoin. Gold is the instrument that the world used for the last 5,000 years to transact, to save wealth, and so on.
Is that
it's
most
also
of the 3.3 billion in precious metals? Is it gold?
Yes, it's only gold. Cool. So we don't have CUSIP things, and so we take this. We think that it's important for Tether to be able to survive to many really maybe far-fetched black swan events, but we think that the composition of our portfolio is quite important and has been carefully designed in order to be able for us to pay to allow all our users to redeem till the last penny of their assets, as happened right in 2022. Again, a lot of FUD around Tether, and we were able to redeem in 48 hours $7 billion in 48 hours. And interesting enough, it connects also to our initial banking discussion. You ask, well, are the banks solid or not? So it's $7 billion in 48 hours means that not only we had the assets and we were extremely liquid, we're 10% of our reserves, right? Just going like that in 2 days, but also is a great factor, is a great testament to the solidity of our banks, because these banks had to pay out $7 billion in 48 hours, and they paid $25 billion in 20 days. So that is another important point on the solidity of Tether.
So yeah, absolutely. I just wanted to ask a follow-up question on the corporate bonds. You were saying they were rated A1 and A2 by Standard & Poor's. So
commercial paper. Sorry, when I said I was referring to the commercial papers that are the ones that were disclosed in 2021 and we reduced to zero by October 2022.
Okay, so I thought you were meaning the corporate bonds. So on these corporate bonds that you're holding as of June 30, which is this attestation, I believe, what are their ratings? And if you can provide more details on where they were issued, because I think there was some speculation that you were holding Chinese issued bonds, and I think the concern there is that there's just less transparency around the Chinese-based issuers. So yeah, I just wanted to clarify that.
Well, look, we don't provide the breakdown of the corporate bonds. Again, if they were all going to zero, we would still have around $3.2 billion in additional reserves. But also, look, I think that in the past, right? You might know that CoinDesk recently released the information related to the FOIL Act. I'm not sure if you're familiar with the matter, right? So in 2021, we published the fact that Tether had around $30 billion in commercial papers, and in 2023 became public, right, through this release of the FOIL Act, that we had a diversified portfolio of commercial papers. And we always stated that the vast majority was A1 and A2 rated by Standard & Poor's. Pretty sure that Standard & Poor's, being a US company mainly, or at least mainly based in the US, or started from the US, is doing a pretty fine job in rating, all the instruments. So again, I'm referring to the commercial papers, but also if you remember on the commercial paper, they said we had Evergrande and that we never had, right? So yes, indeed, there is always speculation. But again, these corporate bonds, we are an extremely small portion of our portfolio. They are anyway safe. They are well protected. They are well liquid. And no matter what, even if they were going to zero, we will have still more money than what we need to redeem every single token.
So the question is, like all of this speculation would be gone, I think, or at least subside quite a lot with an audit, which is something that the community has been asking for a while. So why not just submit your accounts to a full audit?
That's a great question, and it's a question that I get asked a lot. So first of all, if you look at our second competitor, they don't have an audit as well. So, but there is a good reason for that, right? So we are working on that, and people are making fun of us because it's taking ages. But the reality of things is that if you look at the top 4 auditing firms, they are afraid to take on a stablecoin, especially one big Tether, but also our second competitor, right, as a customer, because an audit is pretty simple for a stablecoin, right? You have a total issued tokens, and you have a certain amount of reserves. So is a simple exercise. The issue is mainly reputational because many things happen in the industry, and especially in 2022, ton of things happen, and so the markets, the industry is tainted. And so if you have also big politicians that are kind of against the cryptocurrency movement, big politicians in the US that suggested publicly to auditing firms to not take on additional cryptocurrency related customers. So the risk of, imagine you are a top 4 auditing firm and you are being asked to do an audit. So for whatever amount, an audit has, a standard price, right? They cannot ask you like $1 billion to make an audit, right? So it has a standard price. So you are a top 4 auditor with your reputation. Why you should take on this risk from your side, the perceived risk, right? Because
So are you saying that no auditor has been willing to take on Tether as a client, and that's why you haven't done it?
So we contacted top 4 auditing agencies in the past, and there is always the perceived risk not of Tether, but of the industry. And so that asks you why it's not Tether, it's not a Tether problem. So that's, in a way you are making it sound like our problem.
No. I'm just saying, is the reason why Tether is not getting an audit, is it because auditors don't want to take on a stablecoin issuer as a client? I mean, have you been denied an audit because of that reason?
It's always about, internal risk parameters that they have. But we think things will change. And also, we are working our way. I mean, I understand if you look at our attestation report, it's not a full audit for sure. But also look at how thorough it is. It describes in the details every single bit of information that they get from our banking partners and on all our servers and so on. Because even if it's an attestation, is an attestation in preparation for an audit. So it's so thorough. Usually, if you look at also our competitors, the attestation is like 4 lines. Okay, you have this money, that's it. Okay, fine. Our attestation is extremely thorough, goes through all the different international standards for the processes on how it is done and so on. So, we are doing our best, and definitely FTXs didn't help, the market and the credibility of the market. And, it is what it is. And in the end, if the market if we are $82 billion and we prove to be able to withstand all the different black swan events in the last few years, and our competitors that claim that they are super better than us are actually losing market cap, maybe it's telling that Tether is doing a fine job and actually is in fact more solid than anyone else.
One difference between your report and your competitors, specifically Circle, was they provide the CUSIPs of their T-bills, like that being kind of a signal of, okay, we actually hold them. Would you be able to provide that in your coming attestations?
Well, we are open to discuss internally. We think that it's a way to also disclose our brokers in a way to provide the CUSIP, but it's something that we are discussing internally. So I think eventually, again, believe it or not, we are still committed to work on the audit. So
okay.
Usually we are used to not, we want and we understand that our community demands more information. And look again what we did since 2021. We were the first one to provide the breakdown of reserves. We did that, and the community was concerned about the commercial papers, and we publicly said we are going to reduce them to zero and put basically all the commercial papers in USD bills. And now we are basically the biggest holder in T-bills, well, among the top 20 biggest holders in T-bills ever in the world. So it definitely is a growth journey, right, for us. It's an industry that we created, and there was no book on how to build a stablecoin. So I think, give us, I think that, among all the detractors and among all like the craziness that is happening in the market, it would be nice to have, also some of the hardest diehard truthers to recognize that, in fact, we have been more solid than even the banking industry and basically every single cryptocurrency firm and so on, and some governments as well.
Yeah, no, like I said, I think it was very ironic what happened, and it's true. Your market cap has been growing while other stablecoins hasn't, and it's a show of people do trust you guys. I mean, you remain the biggest stablecoin out there, but yeah, I think a full audit, just more transparency about your banking partners, about your holdings would go a long way. And I think the reason why everyone holds you to such a high standard, it's just because you are such a huge player. So if something were to happen, it would just have devastating consequences on the space. So I think that's why there's all this pressure for a greater transparency. But in any case, I do appreciate you coming.
Good. The pressure is gonna prove.
Yeah.
The pressure is great. I mean, we love to have this pressure, because if we didn't, it means that we wouldn't matter, and we understand how crucial it is, Tether, for the ecosystem, and that's why we're taking it so seriously. And so thank you very much for your interview.
Yeah, no, thank you for coming on.